Hello, this is Stephen Harris, a head trader from Falcon Global, where we model best practices for investors, traders, and day traders from entry to exit every trading day. In this daily video, I provide my opinion and insights of current market trends, market timing, volatility, and hedge risk levels for the upcoming day for the key U.S. financial markets. It is 6:15 a.m. Central Time, and I'm recording this in preparation for the market day, June the 16th, 2015. Full disclaimers are at the end of the video, but be aware that this is for educational purposes only, and only you are responsible for the investing or trading decisions that you make. So let's dive in and see what happened in the overnight action. Actually, quite a bit. We had quite a bit of weakness in all four of the broad market indices, down about 0.5% to about 0.65. With the NASDAQ being the weakest as of the time of this cut. Crude oil was up about 0.32%. The euro was down about 0.2%. You had bonds up about 0.6%, and gold down about 0.32%. Look at China. China down 3.5%. Getting really hit hard. Hong Kong down well over 1%. Japan down about 0.6%. Germany also being hammered in a relative sense. Germany down 1.27%. United Kingdom down about 0.6%. In terms of macroeconomic reports for the United States, you have building permits and housing starts. And then on tomorrow, you have crude oil inventories, FOMC, first, second, third. It's the big one of the whole week. Fed funds rate, that's what everybody's looking for. The press conference, all that occurring tomorrow. So tomorrow will be a big macroeconomic report day. In terms of volatility, note that we've had decreasing volatility, the 5-day versus 10 days decreasing, but certainly things were pretty interesting yesterday. Quite a bit of weakness, but big wicks on the bottom. But we do have short-term VIX now at 16.68. You see the IV percentiles have been coming up, 32, 19, 31, 47, but they're still all in the lower half, so nothing here to get too excited about. When it was all said and done, there were no standard deviation moves put in yesterday, and we've had 3 in the last 2 weeks on the S&P, so still slightly below normal there. So again, kind of keep this in context. In terms of our regular daily report, we are phase 3 still, higher highs, higher lows until proven otherwise. IBD status remains confirmed uptrend. The accumulation distribution charts, S&P was a D, so that is not great. And I think that's supposed to be a minus there. And the GMI index dropped to 4 out of 6. Intermediate term market posture is bullish, but it is a very weak bull at a 39.9, and the Dow a 29.3. NASDAQ's more bullish at a 71.6, and Russell's actually very bullish at an 85.1. Hedge warning status, threshold level 0 plus. This is actually the longest run at a 0 level that we've had in 2015. I think we're somewhere around 20 trading days now. Previously, we had not gotten more than 12 trading days before failure. It's been a very, very choppy and range-bound market. But normal with cautionary aspects is the descriptor on this. We have had additional warnings come in with yesterday's action. Market in decline and sharp increase warnings both fired yesterday. The VIX daily squeeze actually has fired to the long side, so that is also a warning. And notice distribution day count has tripped up to 5 on both the S&P and NASDAQ. So definitely putting into question, the confirmed uptrend, and that could fall if we get another distribution day count. In terms of intermarket risk aversion indicators, we have risk off on 2 of the 5 indicators, so that is also a concern out there. Special opinions, option income strategies, the VIX is inside the acceptable window. Consider the potential for increasing volatility. Cover calls, cautiously bullish, calling for a 3-to-2 distribution between in the money and out of the money strikes. And then finally, put selling. Conditions are acceptable, but consider put credit spreads with defined risk and consider scaling into positions until the market has confirmed a breakout from the trading range. In terms of sector specific, you see a lot of red on the short to intermediate, really only financials holding up, and they're obviously being influenced dramatically by expectations on interest rates. You have, in terms of the percent change, look, only healthcare is managed to be positive across all the time frames. So not an easy market to trade, and healthcare was just barely positive yesterday. We continue to have a lot of stress there. So today's pretty short, pretty straightforward. Let's take a quick look. We got a moment here. Let's take a quick look at the charts. SPX, notice the big wick. Notice also where it came down to. You know, this line was drawn before yesterday, and it touched it to the tick and bounced off of that. So, you know, for the bulls, you know, they'll take some solace in that the support held and was rejected summarily, and yet at the same time it's still a big down day. You got a down arrow there. On the Russell, it actually ended up with a green candle, but that's a false down day. That's to say that you ended up with a negative day, but it's a green candle. So false down day, but big wick here again, but stayed. Look, again, we talked about this channel yesterday morning, and came down right to the channel and bounced off of that channel. Amazing how that stuff works, isn't it? And then, slow down. NASDAQ also coming into the support area and bouncing, but you know, from a relative standpoint, certainly not the same kind of wick we saw in the others. And if you really want to have strength, you got to have that NASDAQ going and driving the marketplace. Here's the Dow Jones, again another example of a bounce off the support area, and then you know, a long wick. But again, you know, this continues to be, you know, more of a down looking trend in the short to intermediate time frame. Transportation's actually had, you know, also a false down day, but you know, didn't seem to have same kind of weakness that we saw in some of the other indices. And then bonds, you know, started out strong but gave it all up. So it's you know, really the story here will be the Fed, and as FOMC releases its minutes, that's probably what's going to define this whole week in terms of what will be the follow-through on all this. So okay, well, enough on that today. If you found us through Twitter, we appreciate your retweeting us to your followers. If you follow us on the YouTube channel, if you like what you're getting here, if you would hit that thumbs up, liked, we greatly appreciate that as well. Feedback is always welcome. Send that to support@falconglobaltraders.com. More information is available at this address as we manage a portfolio option strategy. Performance matters. We get that, quite transparent. And disclaimers as always. Hit the pause button if you need more time to review this. And we'll look forward to seeing you back here before the market open with the market preview on Wednesday morning from Falcon Global. Good trading and goodbye.